right-hand edge of the chart in relation to everything else behind it, but that's my 2 cents.
Jared, we got a little bit of everything here, don't we? We have the CAPE ratio, we have the bulging bicep indicator, lots of good stuff here, always floating around Yahoo Finance.
One.
I know you do. Jared Blickery, thanks so much. Okay, oil prices have regained their bullish momentum, but can it continue? Rebecca Babin is a senior energy trader at CIBC Private Wealth. Rebecca, good to see you again here. Is oil now in a trading range, or do you see it reclaiming some of those highs we saw when Russia initially invaded Ukraine?
Yeah, so I think crude is not in a trading range right now. And the reason I say that is just because you have this massive volatility around almost every headline. I define a trading range as, you're reacting to information, but there's a certainty around what that information can mean. And right now we're reacting to headlines and we don't exactly know what they're going to mean. So perfect example, we have a NATO meeting coming up tomorrow with the G7 and Biden will be participating. Does that mean the EU is going to start thinking about sanctioning Russian energy, or does it mean we're going to unveil a new package? Either way, we don't know, but the market is responding pretty aggressively to that information. And it's just this wider range and a lot more uncertainty and reactions to headlines that we don't really concretely know how they'll impact supply and demand imbalances. So I think we're not in a range. We still have a lot to learn about how this is going to play out, and we can expect more volatility.
Rebecca, it's Julie here. On that headline risk front, there's another one that caught my eye this morning as President Biden is heading over to Europe, which is that Russia says, according to a report from Interfax, Russia says it's only going to accept payments in rubles for gas deliveries, switching to natural gas for a moment, for gas deliveries to quote unquote unfriendly countries. In other words, members of the European Union. But how do they pay in rubles if they can't because of sanctions, even though they don't want to get that Russian gas? So I just, we are watching this remaking of the global energy order as we try to follow all of these headlines. How does that turn out? Like, what does the European energy situation look like a year from now or 5 years from now?
So I think that's where the real conversation is at. And I think what we're seeing is that the fact that Russian energy is not going to be off the market just as this conflict kind of comes and goes, and we hope it goes rather soon. But this is going to have a lasting impact on how Europe gets its energy. And they've already started talking about floating a large bond to fund kind of internal energy, fossil fuels and renewables and greater LNG import capacity. This is going to drastically change the energy complex across the globe, because Russia is not going to remain as big of a player as it has been as a result of this conflict. So I think it very much benefits any energy producer that's local in Europe, in the U.S., and other exporters into Europe, Saudi Arabia, and the other Middle Eastern countries. So I think there's going to be, and we saw Saudi Arabia announce just over the weekend, they're increasing their CapEx budget until 2027 to grow their output in crude oil. They are making long-term decisions based on what's happening right now.
Rebecca, if tougher sanctions do come down on Russia this week, how is the oil market likely to react? How are traders positioned right now?
Good question. So positioning has been drawn down significantly. Last week, we saw open interest in crude oil drop to the lowest level we've seen since 2006. And we've also seen spec players really cut their long exposure. I still think if we do see sanctions come from Europe on Russian energy, we could see another push towards that 225, 230 level. However, I don't think that's the likely outcome from the next couple of days. I think there's going to be increased sanction enforcement of what's already been imposed, but I don't think we see Europe actually step up and sanction Russian energy. If we do, I do think we see a spike, even though positioning has been cut dramatically.
Rebecca, I don't even know if we can predict anymore, or when I say we, I mean you. But, is $150 oil off the table? Is $200 oil off the table? We were having that conversation not long ago.
Yeah, so it's hard to take anything off the table right now. And the reason I say this, and I think you brought up this point, that Russia is starting to retaliate with its own response to US sanctions, whether that's demanding payment in rubles or potentially not allowing crude to flow through a very prominent pipeline through Kazakhstan. So as we see this escalate in ways I think that were very low probabilities when this started and having these tangential impacts across markets, I think 150 isn't outside the realm of possibility. I think 200 would be a massive overreaction because I do think at 150 you start to see demand destruction. And when demand destruction occurs, it really can rapidly impact the price. But it's really hard to say. And if we just look at the nickel markets and how they've traded over the past couple of weeks with a lot of volatility, it's hard to really cross anything off the table. But I'm not saying that that's a high probability. It's not where I expect prices to go by any stretch of the imagination.
Rebecca Babin, senior energy trader at CIBC Private Wealth. Always good to see you. Have a good day.